In 2026, the financial world feels louder than ever. AI-driven trading, 24-hour news cycles, and social media gurus telling you to buy the latest speculative coin or a higher-risk tech stock. It's overwhelming. But here is a secret the Wall Street elites don't want you to know. Complexity is the enemy of execution. Most people fail at investing not because they aren't smart, but because they overcomplicate their strategy. They try to time the market, they panic sell during volatility, and they pay massive fees to fund managers who underperform the market anyway. Today, I'm going to show you a simpler way, a way used by some of the most successful investors in history, including Warren Buffett's mentors. It's called the 3 ETF portfolio. It's a strategy that allows you to own practically every profitable company on the planet with just 3 clicks. It's automated, it's low cost, and historically, it's been nearly impossible to beat over the long term. By the end of this video, you will know exactly which 3 funds to buy, how much to allocate to each based on your age, and how to set this up so you can stop worrying about the news and start building real wealth. The first pillar of our portfolio is the total US stock market. This is your engine. Why? Because the United States remains the most innovative and resilient economy in the world. When you buy a total US market ETF, like VTI or ITOT, you aren't just buying the big names you see on TV. You are buying over 3,500 companies, from the tech giants in Silicon Valley to the industrial powerhouses in the Midwest. If you prefer to focus only on the largest 500 companies, you can go with VOO, the Vanguard S&P 500. Historically, the S&P 500 has returned an average of about 10% per year over the last few decades. Think about the power of that. If you had invested $10,000 in 1980 and just left it alone in an S&P 500 fund, today you'd have over $1 million. No stock picking required. No stress, just the power of American innovation working for you while you sleep. In our 3 ETF portfolio, this will usually be your largest holding. The second pillar is often ignored by beginner investors, and that is a huge mistake. It's the total international stock market. Why do you need this? 2 words: diversification and protection. While the US has dominated lately, there have been many periods in history, like the 1980s and the early 2000s, where international markets significantly outperformed the US. By holding an ETF like VXUS or IXUS, you gain exposure to thousands of companies in developed markets like Japan, the UK, and Germany, as well as emerging markets like India and Brazil. You're buying companies like Samsung, Nestle, and Toyota. This protects your portfolio if the US dollar loses value, or if the US economy faces a decade of stagnation. It's your global insurance policy. It ensures that no matter where the next industrial revolution happens, you own a piece of it. The third and final pillar is the total bond market. If the US market is the engine and the international market is the shield, bonds are the shock absorbers. Stock markets are volatile. We saw it in 2008. 2020, and 2022. There will be years where your portfolio might drop 20 or 30%. For many people, that's too much to handle, and they sell at the worst possible time. That's where an ETF, like BND or a GG comes in. Bonds are essentially loans you make to the government or large corporations. In exchange, they pay you interest. Bonds generally don't grow as fast as stocks, but they are much more stable. When the stock market crashes, investors fly to safety, often pushing bond prices up or keeping them steady. Having a portion of your wealth here provides you with monthly income and, more importantly, the psychological stability to stay invested when things get scary. Now, the million-dollar question: how much of each should you own? This depends entirely on your time horizon, which means how long until you need the money. If you are young, in your 20s or 30s, and have an aggressive outlook, you want growth, you might go with 70% US stocks, 20% international stocks, and 10% bonds. If you are in your 40s or 50s and want a balanced approach, you could move to 60% US stocks, 20% international, and 20% bonds. And if you are near retirement and need to protect your wealth, A conservative mix would be 40% US stocks, 10% international, and 50% bonds. The key here isn't to be perfect. It's to find a mix that lets you sleep at night. If seeing your account drop 10% makes you want to cry, you need more bonds. If you don't care about volatility and want maximum wealth, you need more US stocks. The 3 ETF portfolio isn't about getting rich overnight. It's about being wealthy for the rest of your life. It's about taking the emotion out of investing and letting the collective intelligence of the world's greatest companies do the hard work for you. All you have to do is 3 things: open a brokerage account, buy these 3 funds, and most importantly, keep buying them, month after month, regardless of what the news says. The greatest force in the universe is compound interest, but it only works if you give it time. If you found value in this deep dive, please hit the like button. It really helps a new channel like this. And subscribe for more straightforward, no-nonsense investing guides. Now, I want to hear from you. What is the one thing holding you back from starting your portfolio today? Let me know in the comments, and I'll try to answer as many as I can. Thanks for watching, and I'll see you in the next video.